Hello, everybody. My name is Luke McBain. Today, I'm together with my brother Chad McBain. We are two brothers and Bitcoin, and today's subject is surprise, not Bitcoin.
Not
And
not not the majority of it anyway.
yeah, and but it was so interesting for me when you sent me the article. We can, I mean, I can already like make the big reveal. It is cryptocurrency, and usually the two of us don't talk a lot about cryptocurrency, and we focus on Bitcoin. I think that has certain reasons why we do that. And but in this case, what you sent me in terms of news, and especially again news coming out of the United States, and there seems to be a lot of movement in the United States in terms of the cryptocurrency space. I think this news, I mean, impressed me so much when I saw it. I was going like, well, we have to talk about this, although it's not Bitcoin. But what this news signifies is just so mind-boggling, or so, I don't know, so unsettling, whatever you want to call it. At least for me, it was like another eye-opener that yeah, the best thing is we just talk about it here and
Yeah, for
see
sure.
what we make of that. Or maybe you can explain this a little bit better to say, well, what are we talking about? And is this just like news, or is this something which is significant on different levels? So here it says, Paul Ryan says crypto could avert a US debt crisis. Is that true? And you go like, what? What are they talking about? Crypto is averting a US debt crisis? And so here it says the former Speaker of the House, Paul Ryan, published an op-ed in the Wall Street Journal claiming that stable coins could be a magic bullet to address the country's looming fiscal train wreck. Okay, and down here in the article says, as Ryan notes, longtime buyers of US debt like China and Saudi Arabia have already started to pull back, threatening the long-term status of the dollar as the world's reserve currency. Well, we heard that in the news. We heard things, about BRICS and the US dollar, and if the US dollar is now in threat of losing its status of the reserve currency of the world. Here's the observation. Ryan observes that fiat-backed dollar stablecoin issuers were a country, its US debt holdings would exceed those of Saudi Arabia. All right, so in other words, the way I understood it is that stablecoin issuers are already holding more US dollars than Saudi Arabia does, like a country is holding. And that's where my alarm bells went off, and I said, "What? What's that? What's going on there? What's happening? And why don't we know about that?" And maybe you can explain that a little bit, and also explain maybe a couple of sentences. What is a stable coin? Like for those who don't know what a stable coin or stable coin issuer is, and what's the
Right.
difference between a stable coin and Bitcoin? As I said before, we don't talk a lot about other cryptocurrencies than Bitcoin, but perhaps just a short explanation of what that is, and yeah, why you thought this is relevant news.
Yeah, I guess that's a two-parter. So to explain stablecoins, I'm not the best person to explain it, but my understanding of a stablecoin is it's basically a cryptocurrency that was invented a few years ago to help with the, I guess, value fluctuations between Bitcoin and probably a few other of the leading cryptocurrencies like Ethereum, and the dollar equivalent in whatever country you're living in. So let's use the United States as an example. Bitcoin can be $5,000 one day and $3,000 a week later and $8,000 a week after that. Of course, the numbers are much higher now, but I'm talking about when these were invented. So stable coins were a cryptocurrency that was invented that was pegged to the US dollar. So therefore, if you bought $5,000 worth of, let's say, Tether, which is the leading stable coin in the world right now, it would be worth 5,000 US dollars. So when you're trading or you're coming in and out of some of these cryptocurrencies, because of the fluctuations, not only to the US dollar, but also amongst each other, this was a way to just park your money while you waited to decide what you were going to do next. So rather than let your money sit in Bitcoin or Ethereum or something else for a week while you were trying to figure out what you wanted to do, you would buy the dollar equivalent in stable coins of what your Ethereum or Bitcoin was worth, and then just leave it there, kind of like almost like a guaranteed savings account. You don't get paid interest on it or anything, but when you went back a week later or a month later or a year later or whatever, your value would still be there because the US dollar doesn't fluctuate very much. And maybe you wanted to wait and see if Bitcoin went down in value, and then you could buy back in, and therefore you would actually get a little bit more Bitcoin than what you had a week or two earlier. So I think initially they were started mainly for people that were trading, or people in, let's just be honest, third world countries like countries in Africa or certain countries in South America, where they're just hit so hard with inflation that they want to get rid of their local currency as quickly as possible. And therefore, it's hard sometimes to buy US dollars because the banks there won't sell them to those people, at least not in large quantities. But it's easy to go online with your smartphone and just buy stable coins. So if your currency went down 20% in the course of a month, it wouldn't matter that much if you converted your paycheck into stable coins. So the idea of stable coins is basically a cryptographic algorithmic way to peg to your currency to the US dollar, whether that be Bitcoin or Ethereum or, Argentine pesos or whatever. So that was kind of why they were invented.
Right, and that makes sense to convert your currency of Argentine whatever into a stable coin because you need your money. Like you don't next week want to have such fluctuation that next week actually you made a bad deal. You might have had inflation on your local currency, but Bitcoin also dropped by, I don't know, 20% crazily because something happened. And so there's no fluctuation. It just keeps your value basically frozen in a certain, compared to US dollars, right?
Yeah.
So you know that. Yeah.
So originally they would have been invented because, 6-7 years ago, there was a lot of fluctuation in the value of what Bitcoin was compared to the US dollar on any given day, week, or month. Now the fluctuation isn't, per day isn't as big a deal. Yes, it can go from 60,000 to 62,000, but you roughly have $60,000 or $70,000. So that would have been, a lot of the reason behind it initially. I think what we've seen as Bitcoin has grown and reached a higher level of maturity than it would have had 5 years ago and a much higher levels of global adoption is that its fluctuations aren't as severe. It has 2, 3, 4% fluctuations, not 20 or 30% in any given week. So, but the interesting part is stablecoins have now been adopted by regular people in so many countries in the world because their currencies, as you pointed out, are experiencing tremendous fluctuation in value. So if you're paid 100, and I'm just pulling these numbers out of my head, but if you're paid 100 Argentine pesos for a week's worth of work, and a week later, those same pesos only buy what 90 Argentine pesos would buy that day. You've lost 10 pesos in the course of a week. If you'd taken your 100 pesos from the week before and bought stable coins, you would still have the purchasing power of 100 pesos a week later, even if the Argentine peso had dropped 10% in value. So I think we're seeing a lot of people in high inflation countries around the world. Like I said, some countries in South America, some countries in Africa, Turkey, Lebanon. There's so many places right now that are experiencing anywhere from 50% inflation annually to 150% inflation annually. And when you live in the West, like Canada, the United States, Europe, we complain when we have 7, 8, 9, 10% inflation. These countries are experiencing 50, 100, 150% inflation. So stable coins are becoming adopted very quickly in places like that, just by the local citizenship.
But the stablecoin issuers, which are, I don't know, certain companies or corporations, which then issue these stablecoins, the way I understood it, but please correct me, is they guarantee that one tether is one you will always get for one tether $1 to give that guarantee. It's like they have to have them backed by US dollars, so they have to
Yes.
buy the
So they
equivalent
have
of
to
the
buy,
US dollar.
yeah,
Okay.
they have to basically buy US dollars or US dollar equivalent, which is therefore treasury bonds, right? So what they do, in the case of Tether, and I can't remember the bank that they use in the US, it might come to me. It's one of the old ones anyway, like BNY Mellon or something like that. If anybody in the comments knows, please feel free. But they'll buy U.S. Treasuries through the Treasury market, and then they will store them at said U.S. bank, and that way, dollar for every stable coin issued, they have a U.S. dollar to back it. Yeah.
Wow. And that's where we come to this piece of news where it says now they're becoming one of the biggest yeah, holders of US dollars and
Yeah.
or treasury bonds. And here's just another article you sent me now. Issues are now the 18th largest holder of US debt. And here we have a nice graphic sort of like showing us this in more detail, where it says Japan is number one. Oh, interesting. Like sometimes you just stumble across information, you go like, China, yeah, that makes a lot of sense. But why Japan? Is that because historically, or what, for whatever reason, Canada is pretty much up there as well? Makes a lot of sense. And here we have stable coins. Here it's still below Saudi Arabia. The other article said more than Saudi Arabia and more than South Korea. Certainly more than Germany, which I find interesting because I live in Germany. And so in total, stablecoins are now holding more US debt than Germany or South Korea for that matter.
Yeah. So
Wow.
according to that article, which I believe is only a couple weeks old now, um, it was around, it was similar to what Saudi Arabia holds, but I think the more important aspect of it was if you combined all the stablecoin issuers together, they are now the 18th largest holders of US debt globally. So if the stablecoin issuers were a country, and there's roughly 200 countries in the world, then I know some people will debate that, but between 190 and 200, that means there's 182 countries that have less U.S. Treasury holdings than the stablecoin issuers collectively. And I think collectively they hold about $120 billion in U.S. Treasury holdings, but Tether alone holds $92 billion. So just the one stablecoin issuer holds 3/4 of the total. So it's kind of interesting in a world where you're hearing about the BRICS nations and countries like China and Russia and many other countries, Saudi Arabia, obviously, Brazil, trying to lessen the amount of U.S. debt that they have, and therefore lessen the strength of the U.S. dollar as the world reserve currency. The irony is in that world, the buyer of the debt that they're trying to offload to weaken the US dollar so that they're not as reliant on it, the buyer are stable coins, basically cryptocurrency companies coming in and buying all of those US dollars up from these countries that are trying to get off the US dollar. And I think what Paul Ryan is insinuating in his op-ed is, we've as a country maybe, and certainly as a government, maybe we should take a second look at these cryptos and because they're actually helping the United States by buying all of its debt. And somebody might say, well, 18th out of 200 is good, but so what? Keep in mind, most countries have been around for decades, if not centuries. Stable coins have been around basically for 5 or 6 years. So they've already gotten to 18th in the world in terms of the purchasing of US dollars. Where are they going to be 5 years from now?
Wow.
It's quite conceivable they could be certainly top 10, possibly top 5, because the more people that adopt cryptocurrencies, or to the point of the article, the more countries that are experiencing more and more dollar devaluation in their own currency, the more people are going to look for some type of safe haven. And you might not have a bank account. There's 2.7 billion people in the world that don't have a bank account. But the vast majority of those people have internet access and a cell phone. So they can take their currency and purchase stable coins and use it as a savings. Again, I don't know that they're going to make any interest on this, but they will protect the purchasing value of what they earned that week or that month from their employer or job or their business. So more and more people I believe, are going to turn to that as these currencies continue to weaken. Yeah.
So it's, I mean, for me, the crazy thing was, or the sort of like what I had to wrap my head around was that what has been propagated in the past, or the sentiments regarding cryptocurrencies in the past, and also what governments and politicians said about cryptocurrency in the past and Bitcoin in the past, sort of like seems to turn on its head now. Now apparently it's something very beneficial. Like before that, it was seen as a scam and as some sort of like snowball scam, yeah, snowball system, and
Well,
and now it's seen as, oh wow, well now we see the benefits of this. This is actually they're buying U.S. debt, so this is going to help us in our debt situation, which I find.
so you're 100% correct. Although I would be cautious to suggest that his opinion is that of the U.S. government. I would suggest that there are members of the U.S. government, both in the Senate and in Congress, that are seeing the problem of a weakening U.S. reserve currency. So, for instance, 10 years ago, about 80% of all global trade was done in U.S. dollars. And now it's 60 something. Now, I don't know if it's 69% or 61%, but it's in the 60s. So you're seeing this erosion of US dollar power over the world. Now, some people might say that's a good thing, and I'm not going to necessarily disagree with that. What I'm going to suggest, however, is if I am the United States Federal Reserve, or if I'm a US senator or congressperson, the last thing I want to see globally is less US trade done in US dollars. Or sorry, less global trade done in US dollars. I want to see more global trade done in US dollars. And I don't want to get into the mechanics of how that affects US domestic economy, but let's just say that the more global trade done in US dollars, the better it is for the United States economy. So as that weakens, it hurts the US economy. So as it starts to weaken, if this new buyer emerges on the horizon, and this is a buyer that didn't exist 5-6 years ago, because it's the equivalent of having a new country formed on Earth that has tens of millions of people, and all they want to do is buy U.S. treasuries. Well, that doesn't really work in the real world, because there's no new country that automatically has tens of millions of people. So in a weird way, the internet, cyberspace, and cryptocurrency is this new country that has formed that is buying a ton of US debt and US dollars.
Yeah, billions, as you said, like 130 billion worth.
Yeah, over 100 billion, I think 120 currently, and that will continue to increase. And Tether alone, I heard just last week, has $92 billion in US treasuries. Yeah. And Tether has grown, I believe, by about 50% just in the last 3 years. So if they did that again, and all of the stable coins kind of kept pace, we're looking at 2027, 2028 figures of closing in on $200 billion. Now you're starting to get into the top 10 of countries that would purchase this. So it's a fascinating thing. And I think the more government officials and the more bank officials see that, to them, it's a double-edged sword. The last thing they want is cryptocurrencies taking hold, because obviously they want people using their local currency. But in the case of the US and the US only, cryptocurrencies could be a fantastic thing as long as they take their assets and buy US dollars with it. So all the other countries in the world, their currencies might go down the tubes, but the US would do very well in that scenario. Yeah.
Right. I mean, I immediately get it, and that's probably also where the dynamics is coming from, to see the advantages now clearly for the United States and the US economy. Like, makes perfect sense to me that they go like, okay, if it's like already $120 billion and there's just, I mean, there's also room for improvement, there's still a margin going upward in that area. And who knows, in the future, maybe there will be more international trade conducted in Tether or in stablecoin. Why not? Like, if that's even, I don't even know if that's on the table. Sometimes we hear that, yes, there are countries now doing some trade in Bitcoin, but we never hear about this phenomena. But if that's a scenario, likely scenario, then of course, why not, as a US legislator or politician, decide, okay, now we're really gonna hit the gas on this to make sure that whatever happens in the future, it's still going to be the US dollar. Like, even if countries start trading in Tether, it's still a US dollar, basically. It doesn't really matter. So for us, that's fine, as long as it's our currency.
Right.
So that's, yeah, makes sense why they should now start thinking in that, because if you're like at the forefront of this development, it's very unlikely that there will be another stable coin which has the same proliferation, and that's all what matters, right? So
yeah, I think the catch-22 that they probably find themselves in, and they won't want to admit this publicly, but they would really like to have a central bank issued cryptocurrency, a central bank digital currency. So stable coins are direct competition to them. However, if most Americans, or quite frankly, most people around the world, aren't that interested in a central bank issued digital currency for many reasons, not the least of which is privacy. The second best thing, and again, only for the United States, but the second best thing then will be to have US backed stable coins. Yes, they won't have the monitoring privileges that they would have with a central bank digital currency, but to your point, it will still sustain the US dollar dominance throughout the world for decades to come, in theory. I think there's a legitimate argument to suggest that, based on the current path of some of these countries like China and Russia and Saudi Arabia, that 10 or 15 years from now, maybe less than 50% of global trade is done in US dollars, which would really hurt the United States. But if stablecoins are going to buy all that up, it probably keeps their dollar dominance for another 20 or 30 or plus years, and then who knows what happens after that,
yeah.
So yeah, to your point, if I'm a US legislator, I now have to look at this in a different light, and at least say to myself, this isn't my favorite thing, but even in this scenario, we still come out on top.
Yeah, exactly.
Right?
Yeah.
So,
and there was another piece of news from the United States, which I shared with you, which I thought was also very interesting. And it goes again to this point: what is happening politically in the United States when it comes to crypto? And I don't know how far this is going to progress. Here it says Congressman Matt Gaetz introduces bill to allow federal income tax payments in Bitcoin.
right. Yeah.
Yeah.
I find stuff like this interesting. I do believe that by and large it's done to generate headlines, because, at least for now, most people who are buying Bitcoin don't want to pay their taxes in it. They don't want to buy cars with it. They want to hold it for now, because it continues to annually go up in value. Now, that could stop tomorrow, but I think most people believe that we're not at that point of maturity yet, or global adoption. So I don't know that too many people are going to do this. There was a state, I'm going to say Wyoming, I could be wrong, but no, it was Colorado, I think, allowed people a few years ago to pay their state tax, or no, their property taxes in Bitcoin. And out of, I can't remember how many millions of people that were allowed to do that, less than 2,000 people took advantage of it. So I don't know how big of a deal it is in terms of, Bitcoin adoption, but what I do suggest is it shows that one by one, as we were talking about a few minutes ago, US legislators are now open to the idea of the benefits of Bitcoin, or as per our previous conversation, maybe a stable coin, and are now thinking, opening their minds to other possibilities other than the status quo from the last 80 years, and I think that's really good. The other thing I think this suggests is we're heading into election season. There's a lot of canvassing for donor money right now. The cryptocurrency community has a massive amount of money that they have organized into what's called Fair Shake, which is basically a lobbying group that will donate money to any pro cryptocurrency candidates on the slate, regardless of whether they're Democrat, Republican, or Independent. So if I'm Matt Gaetz or Donald Trump, as we saw last month, or any politician, one way to potentially get hundreds of thousands, if not millions, in donorship money would be to open your eyes and open your mind to Bitcoin and cryptocurrency in general. And you'll probably get a nice check in terms of donations towards your campaign. So it could be something as cynical as that. I don't know, but I don't know that it matters. The more the merrier, because eventually people will slowly adopt it. And obviously legislators need to come along with that ride.
Yeah, and I mean, for me, it was, we also don't know how far this initiative will actually have fruition or not, but what I find interesting is the degree of creativity which comes out of the United States, like to come up with ideas like that and say, well, why can't we accept taxes in income taxes in Bitcoin? What's the problem? Like, it can't harm us. In fact, yeah, well, maybe we just then suck up more Bitcoin as the, in terms of the state having then more Bitcoin. Doesn't mean we, we accept it as tender. It certainly doesn't mean that we do spending in Bitcoin. But if we can suck up some Bitcoin from the market, that's good for us because it just, it increases in value. It's deflationary. That's good for us to have it.
And to our previous conversation, if a state took in $1 million in tax revenue from in Bitcoin, and then during that process, Bitcoin either stayed the same in value or even went up slightly, what they would do if they didn't want the Bitcoin is they would immediately convert it into a stable coin like Tether or USDC, and then sell that and get their dollar equivalent. So it's a seamless transaction for the state. At the end of the day, if they don't want to touch Bitcoin, they really don't have to. But they also are saying to people that want to adopt Bitcoin or want to use it, that they are welcoming to it. But at the end of the day, they can still, so they look like the hero, even if it's cynical. And then they can, within seconds, convert that back into a US dollar using stablecoins. So there's just another example of I think how effective and how useful stablecoins could be, even for the US government or state governments.
Yeah, it's very, very interesting. Very, as I said, like they seem to be thinking how to deal with the phenomena in a creative and productive way instead of just bashing it all the time. Apparently, it's just here to stay. Bitcoin is here to stay, and so how to deal with this, which is in our best interest, let's say, as a government or as a state. Will people really pay their taxes in Bitcoin, as you pointed out? I don't know. I wouldn't recommend it, but maybe some people, it's at least good. It's like for them, it's a win-win situation. It's an interesting suggestion because I think a couple of weeks ago, it was a couple of months ago, there was a discussion, informal discussion in the German, not in the German parliament, but in the German parliament building. So it was an informal discussion, which they had in the building where they invited the German legislators to be informed about Bitcoin. There was this initiative about that. So it was like an information session. And I think one of the questions was, well, how does the EU benefit from this phenomena? What suggestions there were some experts invited, do you have for us, how we can benefit from that? And they didn't really have an answer. Like and this would have been a nice answer. They could have said, well, you can always collect taxes in Bitcoin.
Yeah.
Doesn't
Well,
it doesn't hurt the euro. And in fact, it's
so here's a scenario, and I'm going to use the US dollar, but if the states individually or collectively collected property taxes and consumer taxes in Bitcoin, and they don't really like Bitcoin, they convert it to a stable coin and then convert it to US dollars, again within seconds, simultaneously strengthening the US dollar by doing that. So taking the people that have paid in Bitcoin, so their money technically had left the system, but now they're giving the government their Bitcoin, and then the government converts it into US dollars, so the government has to then go buy the US dollars. So in a weird way, you're strengthening your own dollar hegemony again by accepting taxes in Bitcoin, or any cryptocurrency for that matter. So if somebody wants to pay you in seashells and you can convert those seashells into US dollars, you don't want the seashells, but you get to trade them in for US dollars. So I think actually governments are crazy not to think about this from that perspective, at the very least, Now, maybe it's only the US government or the euro or maybe the British pound that could really entertain that. Most countries, nobody really wants their currency. But if I'm a United States legislator or a member of the Eurozone or the UK, I think they should take a second look at this and see how it could benefit them in ways that they probably haven't considered.
Yeah, absolutely. Yeah, so exciting stuff going on. I'm always surprised at the news that there is again this sort of dynamic in the Bitcoin and crypto space, and yeah, it's exciting to witness that, and let's see how things will move along in the next couple of months, this year, next year.
Yeah, it should be an interesting final few months to the year.
Yeah. Well, thanks again, Chad. That was a really interesting conversation. Thanks for sharing these articles in the news and walking us through that. That was really very interesting. Thank you very much.
Oh, my pleasure. Thank you.
All right, see you next time.
See ya.